Welcome back to the Daily Crypto Roundup. Before we get into today's market action and the headlines, we just want to take a moment to say a genuine thank you to everyone who's taken the time to leave supportive comments over the last few days. We've seen them all, we really appreciate them. And we're sorry we haven't managed to reply properly yet. We've been traveling quite a bit recently, which has made it harder to keep up in real time. But we'll be catching up and replying properly this evening. The support never goes unnoticed, so thank you again for sticking with us. Now, turning to the market, today's session is a good example of why this phase feels so frustrating for so many people. After attempting to bounce earlier, prices across crypto rolled over again, tracking weakness in broader risk markets. What we're seeing isn't a collapse, but it's also clearly not a sustained recovery. Instead, the market is struggling to find follow-through, with rallies fading quickly and dips being bought only cautiously. That tells us something important. Confidence hasn't disappeared, but conviction is still thin. In today's roundup, we're going to walk through why the market attempted to bounce and then failed again, what analysts are saying about this phase, and the most important crypto stories from today that actually matter going into the new week. Before we move on, a quick reminder about the XRP giveaway. One comment will win 10 XRP, another will win 5 XRP. When we reply to you, just leave your address in the comments and we'll sort the transfer. With comment activity a bit lighter this week, the odds are better than usual, so if you're listening and haven't commented yet, it's worth getting involved. Let's anchor ourselves with where prices are right now, after today's renewed dip. Bitcoin is trading around $88,800. Ethereum is holding just above $3,000, near $3,010. BNB is around $864. XRP is trading close to $1.93. Solana is around $127. Tron is sitting at roughly 28 cents. Dogecoin is hovering around 13 cents. Cardano is near 38 cents. Bitcoin Cash is trading around $590, and Polkadot is close to $1.80. Those prices reflect a market that has pulled back again, but hasn't unraveled. Bitcoin remains well above major long-term support, while altcoins continue to show relative weakness, a pattern that has been consistent throughout this phase. So why did the market dip again today after attempting to bounce? What's notable is that there wasn't a single dramatic headline, regulatory shock, or crypto-specific failure that triggered this move. Instead, multiple analysts have pointed to a combination of thin demand, leverage positioning, and broader risk-off pressure. This is the kind of environment where markets don't need bad news to go lower. They just need a lack of good news and insufficient buying interest at higher levels. James Check, a senior on-chain analyst at Glassnode, who has accurately called several major market inflection points in past cycles, said today that Bitcoin is currently trading in what he describes as a low conviction zone. His view is that most investors who wanted exposure at these levels already have it. Without a new wave of demand, even modest selling can push prices lower than expected. That perspective was reinforced by Alex Thorne, head of research at Galaxy Digital. Thorne noted that recent price action has been driven more by positioning and derivatives flows than by sustained spot buying. He explained that when rallies are built on leverage rather than real accumulation, they tend to fade quickly. According to Thorne, this doesn't mean the cycle is over. It means the market is struggling to justify higher prices without fresh capital stepping in. From a macro angle, Lynn Alden also commented that Bitcoin's behavior over the last couple of sessions mirrors broader risk asset fragility rather than any crypto-specific breakdown. Alden, who has maintained a long-term bullish outlook on Bitcoin while repeatedly warning about short-term liquidity risks, pointed out that in environments like this, Bitcoin often trades as a high beta risk asset rather than a hedge. That makes it vulnerable when equities and other risk markets wobble. We are going to pause here for a quick word from our sponsors. We will be back in a few moments. Now moving our attention to Bitcoin, which remains the focal point of the market, and today's news reinforces that institutions are still involved, even if they're being more selective. One of the more interesting stories today is that Strategy paused its Bitcoin purchases after a period of aggressive accumulation earlier this month. While this isn't a sign of reduced conviction, analysts noted that the pause itself is meaningful. Strategy has historically been one of the most consistent corporate buyers of Bitcoin, and its decision to step back temporarily suggests a more tactical approach in response to recent volatility. One of the less visible but increasingly important forces behind today's price action is what's happening in the derivatives market. According to data referenced today by Marcus Thielen, head of research at 10x Research, Bitcoin's options and futures markets are currently showing elevated open interest without a corresponding increase in spot demand. Thielen has repeatedly warned in previous cycles that this imbalance creates fragile price structures, where moves are driven more by hedging and liquidation flows than by genuine buying or selling conviction. He noted that when open interest builds during sideways or weakening price action, the market becomes highly sensitive to relatively small triggers, often resulting in sharp drops followed by equally sharp but short-lived rebounds. This helps explain why Bitcoin keeps snapping lower and then quickly stabilizing, only to roll over again. In Thielen's words, the market isn't choosing a direction yet. It's being mechanically pushed around by positioning. That dynamic also spills into altcoins, where thinner liquidity magnifies these effects. When Bitcoin wobbles under this kind of structure, altcoins tend to bleed slowly, rather than crash outright, creating the drawn-out frustration many investors are feeling. Importantly, Thielen has emphasized that this kind of derivatives-driven environment doesn't signal the end of a cycle, but it does mean that patience becomes more important than prediction. Until spot demand clearly returns and open interest resets, price action is likely to remain choppy, reactive, and emotionally draining for anyone expecting clean trends. At the same time, institutional infrastructure continues to expand. JP Morgan is reportedly weighing whether to offer crypto trading services to institutional clients. While no final decision has been announced, the fact that a bank of this size is considering expanding its crypto offerings highlights how deeply embedded digital assets have become within traditional finance. Even during periods of price weakness, the long-term build-out continues. Another major Bitcoin-related development today came from the corporate side. Trump Media disclosed that it added 451 Bitcoin to its reserves, bringing its total holdings to over 11,500 Bitcoin, now worth more than $1 billion. Regardless of politics, this represents another example of a public company using Bitcoin as a treasury asset at scale, reinforcing its role as a long-term balance sheet instrument rather than a short-term trade. Ethereum, meanwhile, continues to struggle to assert leadership. Holding above $3,000 is important psychologically, but rallies have lacked momentum. This has kept pressure on Ethereum-linked products, including ETFs, as investors wait for clearer direction. Analysts have pointed out that Ethereum often lags during periods of Bitcoin dominance, especially when risk appetite is constrained. On the XRP front, today brought a genuinely new development. Firelight launched an XRP staking protocol on the Flare network. This allows XRP holders to engage with staking-style mechanics through Flare's infrastructure. While it's not a dramatic catalyst, it does show continued ecosystem development at a time when price action alone can feel discouraging. Exchanges were active on the news front as well. Coinbase announced the acquisition of a prediction market startup, The Clearing Company. This move signals Coinbase's intent to expand beyond spot trading and into event-based markets, which have been gaining traction as alternative tools for information discovery and speculation. Finally, stablecoins and global regulation made headlines today. USDT issued on the Tron network was officially recognized within the Abu Dhabi Global Market Framework. This step highlights how stablecoins are increasingly being integrated into regulated financial systems outside the US, reinforcing their role as core infrastructure rather than peripheral tools. Taken together, today's stories point to a market that is under pressure but not broken. Prices have dipped again, but the reasons are structural rather than catastrophic. Institutions are still building, development continues, and long-term adoption narratives remain intact, even as short-term price action tests patience. Going into the new week, the key theme to watch is conviction. Until fresh demand returns, rallies are likely to remain fragile. But history shows that periods like this, where markets feel heavy, headlines turn cautious, and enthusiasm fades, often lay the groundwork for the next phase. That's where we'll leave it for today. If you found this useful, make sure you're following, Drop a comment for the XRP giveaway, and we'll keep tracking the market as it evolves. And as always, we will see you at the top.